Hi everyone, welcome to Crashes and Taxes. I'm so good and glad to be with you today. And for those of you that are joining via audio, just know that we also are video casting this. So you do and can get video if you want to watch it on video. Otherwise, just sit back and relax and listen to Crashes and Taxes with me, your host, Rebecca Walser. Super excited to be with you. I want to just apologize to everyone that is on a Crashes and Taxes distribution. It was a little bit sporadic there for a while. Let me explain. Obviously, I run a successful wealth management practice. I am a tax lawyer, a certified financial planner, all these things. I have my own practice. And at the same time, I crazily decided to join the London School of Economics Executive Global MBA program, class of 2022. And that is in full swing now. And so I took my time up for the first half of January completely, and something I signed up for, I agreed to it, and it's exciting and happy. But at the same time, it has made me have a lot more constraints on my time. So I've got that worked out now, and we are going to consistently be doing Crashes and Taxes every week. It's planned into my schedule. My team's got it, and we're doing it. So please bear with me, and I apologize for those of you like, where's Rebecca's Crashes and Taxes? It's been a little bit. I want to talk to you about a lot of things today. Specifically, I want to just dive in for a moment to this whole hubbub that's happened around Robinhood, shorting stocks of hedge funds, and also the little guy investor kind of banding together and giving the hedge funds a run for their money. Man, that was phenomenal. It's interesting that they chose the Robinhood platform, because if you watch the Robinhood commercials, they are all about, hey, we're a retail platform meant and designed to give the retail investor a seat at the table, and that it's not just all rigged for the big guys. And that's the whole Robinhood model, according to what their commercials state. However, what's interesting is what happened after the little guys actually were successful in giving the big guys a run for their money. So if you don't know what I'm talking about, let me just high level quickly go over it. Most of you probably listening to this podcast probably do know, you're probably quite informed, but there might be some of you that just listen and aren't exactly aware. So when you short a stock, when anyone shorts a stock, what that means is you're betting against the stock, meaning you believe the stock is overpriced and will go down. So you don't actually buy a stock when you short a stock. You actually borrow a stock. You borrow a stock from somebody who owns it, and you sell that stock at a high, at its current level, because you believe it's going to go down. So let's just use easy numbers. If you think a stock is overvalued, stock A, at $100, you think it's overvalued, then you would borrow a share of stock A while it's trading at $100 because you think it's overvalued and it's going to go down. You'd sell that stock at $100, and then you would wait for it to go down, and then you would buy it when it's lower. Say it goes down to $50. Now you buy it back at $50. You give it back to the person who you borrowed it from. They weren't selling it. They let you do what you wanted. So you replenish the stock. You do have to buy a stock at some point to replenish it. So here's the problem. All of these hedge funds, some of them, quite large, and had a huge impact. They shorted, for example, GameStop. They thought GameStop is the same as Blockbuster, and anything before it that basically required cartridges, games, physical games to be inserted into a physical machine, like a DVD into a DVR player. Basically they were betting against GameStop and AMC theaters both. And so they were shorting it, thinking that this is overpriced, overvalued, it's going to go down. They borrowed stocks, sold them at the high level, made that money, and they were waiting for it to go down so they could rebuy it back. Now, some people have pointed out publicly disseminated that some hedge fund participants or managers or people that are in this world will go on to the business channels, CNBC, Fox Business, and say, the sky is falling on a particular stock. I'm not going to give you names because, this isn't meant to be a political discussion and to really get anybody in trouble. But I would just tell you, there are examples of people that are intertwined with hedge funds, going on to business channels, as I do. I'm on business news all the time. I just don't talk about a specific stock. You know, somebody is saying this stock is going to zero. What happens when you have somebody from Wall Street, a money manager from Wall Street, going onto a business network and saying this stock is going to go to zero? People listen to that. They go out and sell. And so the selling, which as we know is in economics, a reduction of demand, means a plethora of supply, and therefore the stock price comes down naturally. That's the law of economics. So you've got people selling when people are saying, oh, the stock's going to go to zero. Then you have a mad dash for the exits on that stock, and the stock actually does go down. And now the hedge funds that have shorted it can then, in fact, realize their lower price, buy it back, and make money. So what happened recently with Robinhood specifically is you had a group on Reddit. Reddit is a public chat message board, and there's different subgroups, and there's a subgroup called Wall Street Bets, BETS. There had 3 million active participants, and on this Wall Street Bets, they started discussing this hedge fund shorting situation and how they make their money and how they, almost sort of talk down on the stock and depress it so much and then make money on that trade that, they could force it to zero. You could see easily public opinion being swayed easily against any one stock and making certain pressures and price constraints happen where it does go out and get shorted and it pushes its value down so that the hedge funds can go and buy it up on the cheap and really lock in their gains and their short trades that they actually executed. So what happened with Reddit and Wall Street Bets, the subreddit group of 3 million people, is they started buying GameStop and they started buying AMC, and they took the price. It was $4 last July of 2020, and they took the price to $347. And this all culminated basically on Wednesday. So what you saw on Wednesday was pressure all of a sudden from the hedge funds over to even NASDAQ about maybe even shutting the exchange down. Now that did not happen. I was on Fox Business and I was starting to make the point of the pressure that was being put onto the exchanges to shut trading down. And, one of the other guests on Fox Business started screaming, that never happened. They didn't shut down the exchange. I didn't say they shut down the exchange. I said that they were pressuring. You have this now view that the big boys, the hedge funds, the Wall Street banks, the investment banks, they can pressure the exchanges to do something. They weren't successful. They didn't shut down the trading. But the very next day, Thursday, after all this culminated on Wednesday, the very next day, Thursday, we're talking last week now, the Robinhood shut down trading on both AMC and GameStop, and Merrill Lynch followed suit, saying that they were worried that if Robinhood wasn't allowing the trades, that these people would come over to Merrill Lynch and make the trades. Let me just explain. Robinhood came out and said that they did that because they needed to. You have to have so much capital, according to SEC regulations. You have to have so much capital if you're, an exchange you have to have the money there to execute the trades. Robinhood has said they didn't have the $1 billion that they needed to execute the trades, and so they had to halt the trading. Now, here's the problem. How do we know that's what happened? How do we know that's the reason they stopped the trading? Because if they can't come out and say, yeah, we didn't want this to happen any longer, so we halted trading. They have to have a reason to explain. And I will just tell you, there are people in the know in this business that said that Robinhood could have easily gotten the $1 billion on Thursday instead of on Friday when they got it, and then reallocated trading. What they're saying is they didn't, because Thursday gave the short sellers enough time to exit their shorts. So that's the problem. Is the game rigged? The whole point of capitalism, the whole point of a free market is, in fact, that it is free. It is a free market. We know that it's not free. We know that we don't know all the things that everybody knows that's inside these hedge funds, that's inside these big investment banks, that they talk to each other, they communicate. The SEC does a great job of what they have the manpower to handle. But if you think that one regulatory body or two or three, because there's others obviously that are involved in securities, even states have blue sky laws. If you think that these governing bodies can prevent all kinds of communication that is how information is exchanged. The thing that bothers me in this world is Reddit. By the way, Reddit since shut down the group Wall Street Bets, it's now private and you cannot join it if you weren't already a member. So this is the thing that it's like, why shut down public disclosure and Discord? Why shut down the free exchange of information? This is a public forum, a chat message board. You know, there was no inside information being disseminated on that board. I'm not a part of it, so I can't say that with 100% truth. I don't know that there wasn't an employee or something on that chat board. But what I'm saying is this is just a public message board. And as far as we know, there was no insider information. None of these people are professional advisors like I am myself, regulated. They're not accountable with rules, regulations, guidelines. This is just a public chat board. So why are we making the public chat room now private, that you can't join it? Why are we now not able to, buy more stock to keep the price going up? Because that's what they were trying to do, is they were trying to basically squeeze the short position, or, a short squeeze, if you will. And why? So the little guy now is perceiving that, the second the little guy bands together and really gives the hedge funds a run for their money, you've got a lot of institutional help that will really be able to cut it off, shut it down. And that is a problem, because, if the little guy can get in there and make a difference, and then we're going to use regulation laws. You see now a bunch of Congress people coming out and saying, well, we can now, people don't know what they're doing. They need to be protected. So because they need to be protected, we're going to go ahead and, write regulations. And Ilhan Omar, Representative Ilhan Omar, she said, proposing a 0.1% transaction tax every time a trade is made, which the big guys will figure out a way to pass on, and the little guys will not, and they will be paying it. So it only helps the retail investor. It doesn't hurt the institutional groups too much, I don't think. It's so suspicious that now we're talking about, well, we need to prevent this, and we need to tax this, and we need to change this. And no, we're going more and more and more away from a free market in those circumstances. So no, I don't agree with that at all, and neither should you, and neither should anybody. We need more transparency. We need more openness. We need more open forums. We need more dialogue. We need more public disclosure. The answer of this whole country going and moving and marching towards communistic, almost reminiscent of Nazi Germany, the censorship that's been handed out to America since January the 6th. January the 6th, I think, was the turning point. That's when the people that were in DC, that were the Trump supporters, they want to portray that event as terrorism, domestic terrorism, and they're now using that event to parlay their true intentions of getting conservatives, libertarians, right-leaning thinkers off of Twitter, Facebook. I don't even know all the social media platforms that they're coming for. And the answer, in my opinion, to bad speech or bad viewpoints, and when I say bad, I just mean the viewpoints you don't agree with. Everyone's definition of which viewpoint they don't agree with is personal to them. The answer to dealing with viewpoints that you disagree with is not to shut them down, but it's to just speak yourself and to convince people with your logic and your arguments that those people are wrong. But when you start to shut those people up as the way to deal with their message, people start to think something's wrong here. And by the way, you cannot shut down people from talking, especially in this connected world. You might be able to temporarily block their connectivity to the groups they already have. But let me explain something. The truth, conversation, public disclosure, it always finds a way. Look, go ask people living in China under the CCP that controls everything and has a social crediting score system, how they get true information that doesn't come from the communist propaganda machine of telling them what they think they want them to know. There's always a way. You look at Gab, Gab.com. This Gab guy, Andrew Torba, he created his own server farm. He has created his own hosting platform because he knew, unlike the Parler app CEO, that the entire infrastructure could be attacked as somebody promulgating propaganda or dangerous hate speech. If you want to shut someone down, you just label them as a hate speech, because the hate speech, there are two types of speech that are not 100% protected under the Constitution. You can't yell fire in a crowded theater. You can't create a pandemic or a mass hysteria. That is not protected speech. And also some forms of hate speech aren't protected speech. So you want to shut somebody down, you just say that they're a hate speecher. It's really hard to say that someone's hate speech just because they are wanting to talk about what they think is maybe potential election fraud. So all of this now, what I've seen in the last week on the Sunday shows, even this past week and the week before, the amount of newscasters, journalists who are sitting, and I'll give you one specific example. It was the ABC's This Week with George Stephanopoulos, I believe is the name of it, ABC's Sunday show. And George Stephanopoulos was interviewing Republican Senator Rand Paul from Kentucky. And he said to Rand, can't you just stop with this and just admit that there was the election was not stolen and that is just a lie? And Rand Paul, kind of tried to deal with it, but he went back eventually and he said, just because it's not what you want to believe, you forget your place, George. He said to him, go back and watch that. Senator Rand Paul said to George Stephanopoulos, you forget your place, George. You're the journalist. You're supposed to be asking me questions, letting me answer the questions. You're not supposed to be telling me what the facts are and then waiting for me to just, respond to your version of the facts. And facts don't have versions. So, what I'm trying to say is a lot of stuff is going down in our country right now. We are seeing a lot of shakings in this country, and we're going to see more. Prepare for more, because some giants are being awoken here. I think that people on the conservative side, the ideological spectrum of conservatism, libertarianism, people that want government less involved, because they know it doesn't usually go well, that's maybe being awakened. And this example of Reddit and Robinhood and AMC and GameStop is just the most recent example of, is the system rigged? And people are starting to say, maybe it is. And what can we do about it? And I can't tell you whether it is or it isn't. I can just tell you that with a rigged system and a non-free market system, that isn't fair. And that's when the little guy isn't going to want to invest. We need to know that we aren't going to be stopped if we want to have a public chat and talk about a stock. I mean, do you know how many investment clubs are out there that a group of people meet and discuss what they think are good? This is a fun activity. I remember in college, in my undergrad with my degree in finance, there's all kinds of professional investment clubs that you can join. I was in college back in the day when the trades were listed in the paper every day. The closing prices were listed in the market section of your paper every day. That's how far and long ago I've been in the market and in this financial world. So now that information is a lot more quickly disseminated, and you have groups that are saying, hey, we can band together as a group of little retailers and retail investors and make a difference, good for them. And, and for people to say, well, it's collusion or whatever. These people are not regulated professionals. They do not have insider information. They're just in a chat room. They're in an investment club, the modern day version of an investment club. And they are, they're doing what they're doing. So I don't agree that we need to regulate anything. If you start taxing trades at 0.1%, you're going to hurt the little guy. The institutional guy will figure out a way to pass the trade costs on. This is it. I mean, businesses don't pay taxes. They pass those expenses on in the form of what you're buying as a service or you're buying as a product. And that's why we are so anti-raising the business taxes, because it doesn't ultimately hurt the business, until there's a certain threshold, and then people will just not buy the product and it will hurt the business will go under. So what I'm saying is these incremental tax increases on businesses are passed through as long as it's possible to the actual consumer. And when it's not possible, the business will go out of business. So overall, it is never it doesn't ever raise the government expectation of actual revenue. You always get these projections by the Congressional Budget Office, and it is never what they project. The tax never raises what they project, because they do not project in those tax raising models what we call the law of unintended consequences, the reaction by people. It's like the law of, for every action, there's an equal and opposite reaction. So when they're building these models of how much this tax revenue is, they take the number of transactions, they apply the tax, and they say this is approximately what it will be. Maybe 10% of people will stop, so 90% of the revenue will stay the same, and then here we apply the tax, here it is. That's not what happens. That's not how it really works in the real world. And that's why we have the law of unintended consequences, and that for every action, there's an equal and opposite reaction. So I just want to join with you today and say that we are in a new era. This is a new era of time. And it is going to get crazy here for a little bit overall. And this is what happens when you change from one administration that is going in one clear direction with a lot of America First policies, low taxation, putting the rest of the onus of the world security on other countries besides just the United States. And you go over to an administration who wants to open the border, tear down the wall, increase the cost of insulin. Who knows why that would be something that would be important for anybody except for the pharma companies. You want to raise taxes and now even tax retail trades and high frequency trades as well. They want to tax it all. But I just want you to know that we will get through this. We will get past all this. That we will, the truth always comes out. You can't suppress it. And so we will find out what eventually happened. It will come to light somehow, somewhere. It will be brought out, and people will know what's going on, and they will figure out how to deal with things accordingly. And maybe, Robinhood is just done as a platform, because the guy that they represent, which is the little guy, watch one of their commercials. That's all about how the little retail guy should have a place at the table with the big guy, the big hedge funds, the big investment banks, the big Wall Street firms. The little guy, Robinhood, should be at that table. And that's why all these retail investors join Robinhood. And I think that this week a lot of people think, no way, they're not for the little guy at all. In fact, they're helping the big guy, and that's not what we want. So I don't know where all this is going to land and end. I just know that you should prepare yourself and your portfolio for some volatility. Some extreme volatility is coming. Hopefully it'll be done by the first quarter, because I do see a message of hope for you that 2021 overall, it's going to be a great year after we get through this. I don't know how long it's going to take to get through this, but after we get through this, it's going to be a great year, because we do have a lot of pent-up demand. And I will put a little caveat on that and say that it's going to be a great year as long as we figure out a way to get our economy back open. So the pent-up demand I'm talking about is in going to a concert, going to a sporting event, getting on a plane, going on a cruise, staying at a hotel, doing anything and everything that you can and you want to do that you didn't get to do yet last year for the last however long because of coronavirus. Now, I know we have new strands out there, and I know we have a vaccine also that might not be for these new strands. All that to say, listen, at the end of the day, let's look at how this virus has happened. Interestingly enough, since the Biden administration has come to town, I've noticed that the CDC has refigured out they've said that the PCR test is actually unreliable with the number of revolutions that it goes through to accurately detect the virus, and that they are adjusting that so that they can lower their case counts. And they also said that they overcounted COVID deaths, and now we're going to get more accurate numbers. It's interesting that happens after the new administration takes office and not during the Trump administration, which seemed to really help his economy get wrecked. It's interesting. Don't you think it's a coincidence that the CDC and that, Governor Cuomo and the mayor of New York and the city of Los Angeles now all are saying, let's reopen, but because it's killing businesses, but we couldn't get to that until after the inauguration. Interesting to me. I think that's a little bit suspect, a little concerned with the timing on that. I mean, come on. Do people think we're dumb? We are so smart. Americans are so smart. The information is out there. Why do we have all these shutdowns when we knew it was killing us forever? But then the second that we get the new administration, we see that the shutdowns are being lifted and people are saying that we are over counting these cases and that the PCR test is giving us too many false positives. It's crazy. I mean, just come on, we're not dumb. I don't know. I guess Americans are so busy with their lives, they just don't pay attention to what's going on to put all these pieces and connect these dots. But let's get real with people, okay? We need to open this economy. We got to get the economy back open. We have pent-up demand that we want to see come to fruition in the marketplace. When that happens this year, and it will, 2021 is going to be a great year. We have a lot of room to grow with where we did not spend last year. So I hope you all are doing well. It's going to be a great 2021 eventually. And just prepare for the bumpy ride. It's going to be bumpy. It's going to be volatile. But we will get through it. And I'm going to have so much fun with you this year talking to you about all of it on crashes and taxes. So until next week, my friends, I will be with you again. Take care.